Was released. Todd Horwitz joining us live from the floor at the CME Group. Todd, I heard you visiting with Marlon here last hour, and your thoughts here for those that didn't hear your comments then about what you see in this grain trade and what these numbers show.
I think that, again, we've got so many issues to worry about other than just the production in the general economy. If we're really seeing a supposed improvement in the economy, if we're seeing all these more population, we should have record numbers and we still should have higher prices. I think that the bad news has been beaten into this pretty good. I don't see a tremendous amount of more depth going to the downside. In fact, I had orders working to buy lower. They didn't get low enough for me to get in, and certainly I was trying to buy. Now, the only one that scares me a little bit here, and only based on the technical pattern, is soybeans, because they have made a new contract low. That's never a great sign. Now, if we can build a base here, I would be back to front of the soybean space as well. But overall, in general, I'm a buyer. I don't see any reason to be a seller. Yes, you can make a little bit of money on the short side, but if you're a producer and you can put this away and hold on to it, I think you're much better holding on, because I cannot imagine the Bloomberg Index commodities at 17-year lows. We've got a Fed that has no idea what the heck's going on around them, and we've got all this other nonsense, plus now the dollar's approaching $1 again. So all these putting massive pressure, and yet where are we? We're down 25 cents from the top, from the most recent top in corn. With all this stuff happening, I think it's a buying opportunity.
But beans, you want to be a little bit more cautious, if I'm hearing you.
Well, yeah, I mean, just technically, I'd like to buy them, but I never advocate, as a trader, I never advocate trying to pick the bottom. It's got to show me where that bottom is going to be, and then I would be happy to buy it. But again, I'm not going to try to figure out where they're going to stop. Now, they're not down, certainly they're only down 15 cents. I don't mean like only. It's not like it's only 15, but it's down 15 cents. They could be down 60. So, you look at it from let's look at the glass half full, which usually I don't do, but I'll use the half glass full this time.
All right, and those are running pretty close together on those soybean futures. And you look out January and March, corn down as well here after that report. Looking at December or on out into March of next year, you want to hold that corn. You say if you have storage, hold it.
I believe so. I think you're much better off, Mark, if you can hold this here and hedge these prices in right here. But there's ways you can lock these in synthetically without having to worry about it and not cost you anything. But overall, I want to hold. I think we can see higher prices coming forward.
All right. We haven't talked about wheat, so we're down 8 to 9 in corn, down 14, 15, as you mentioned, in soybeans. What about that wheat number? There wasn't a whole lot of wheat numbers, of course, no production, but the world numbers, sending wheat down double digits, second day in a row.
Mark, wheat's been, as we've said all along, it's been the most wild of the bunch for quite a while now. And all we are is back down to that, that 489, 488 level. I'm a buyer down here again. I firmly expect, as we said last week on air, we wanted to sell them at 530 and take our profit and look for a pullback to 5 or below. Well, here we are. So I'd step in here. I think this is probably the bargain right here, because, again, I don't see it going a heck of a lot lower. I'd step in here and probably look to buy wheat here. I do own some myself, but I'd like to buy more down here.
All right, Todd Horwitz live from Chicago. We'll see what's going on and then why it's going on in the livestock trade with Todd. His comments coming up 1 minute. We return right after this.